Hi, good evening. Let me just check the chat settings. Let me share my screen. All right, so hi guys. Just want to check if you guys can see my screen. If you can type it in the chat box that you are able to see. Are you guys able to hear me and see the screen? I will need someone to respond before I can start sharing today's webinar. See someone raised your hand. If you have any questions, do type it in the chat box. It's a bit hard for us to catch that function. Okay, I'm assuming the screen is actually sharing fine. You guys can hear me perfectly. Okay, so a little self-introduction. We are bringing you the webinar from the Everest Fortune Group, and we are also the best finalists for Best FX Research for 2019, 2020, 2021, and also Best Equity Research in 2020 and 2021. Okay, so today's agenda will be on risk management and on leverage. So it's a pretty lengthy chapter, this webinar. If we have any extra time left, I'll be doing some live analysis for you guys, and then we can better see today's chapter on risk management, and also what does risk and reward ratio actually really mean. So what is risk management? So risk management is basically a set of rules that governs the trader's actions to protect against the downside of the trade. So many of you might know there's something called stop loss, and as well as a stop loss margin that we are looking at. And then on the second point, since every trader will experience a loss or a series of losses at some point, proper risk management is actually essential for long-term trading success. Okay. So risk is the opposite to reward. I mean, that's very simple. Okay, I will need everyone to actually mute and close off your videos. Okay, if you have any questions, you guys can actually type it in the chat box. All right. Okay, so at which point will your analysis be considered incorrect? So this is where we consider when do we, or what price, at what point that we put in our stop loss, and how much would you lose at that point of time? Have you guys calculated what kind of percentage of a risk reward ratio you guys are putting yourself into once you enter upon your analysis, and the appropriate size for your trade? Tools for effective risk management. Okay, there's 3 types of rules that traders can follow through. One of which will be leverage and margin. Second will be stop loss and take profit. And lastly will be risk to reward ratios, which is the one that I have been talking about. Okay, so first up, we can talk about leverage. So just want to know by a show of hands or a type of yes in the chat box, how many of you actually leverages through and actually knows well enough about the concept of leveraging? Okay, I'm assuming everyone's still pretty new on the concept on leveraging. So let's take a look. So basically, leverage is the ability to control a large amount of money using a very little amount of your own. All right, enter in a position that is more valuable than the amount of money you have in your account. Sounds like a pretty good concept, but it's also a very hard concept to actually grab, right? So leverage is a double-edged sword. So for example, right now you are looking at a capital amount of $10,000. Let's look at the first leverage ratio of 1:20. So you're able to control a position of 200,000, which that will allow you to have a maximum trade size of 2 standard lots. And every 10 pip move, you'll profit in $200 in your capital. Looking at the second leverage ratio, we are looking at 1:100. So you're able to control the position of 1 million, all right, with a capital amount of $10,000, which allows you to have a maximum trade size of about 10 standard lots. So with every 10 pip movement, you'll get $1,000 back in profit. And then lastly, we are looking into a 1:500 ratio, looking at a 5 million controlling of a position, and that gives you to the amount of 50 standard lots, looking at a $5,000 reward at every 10 pip movement in your direction of your analysis. However, we are now going to look at the losses that could incur from the leverage movement. So back to the first kind of leverage ratio at 1:20, we are looking at 2 standard lots. With every 10 pip, your losses will go to $200. So basically, it is the same as the amount of money they will gain if it works out according to analysis. And then we are looking at the losses as well. So for example, you take the last ratio, the last leverage ratio, 1:500, giving you a controlling of a position of 5 million. 50 standard lots. So every 10 pip will cost you to lose $5,000, right? So that will actually take an impact on your capital amount, just by that's as equal as 50%. So leveraging might sound great if you are all winning or profiting and your analysis just so happen to work out fine. However, if you are losing, you could lose your account to a margin call really, really fast. So let's look at margin right now. So margin is the amount of money that trader need to put forward to open a trade, and then margin level equals to equity divided by use margin times 100 for percentage. So for example, we can take a look right here. If you're using the ratio of 1:100 leverage ratio, use a margin percentage of 0.01 equals to 1%. So buying 100,000 euros with the current price of 1.04 USD with a 1% margin, your required margin would be at 1.4K. Margin level equals to 10,000 divided by 1.4K times 100, that will be 714%. So I did mention about margin call just now when we were talking about the losing of a profit. So you can see that margin call level is when the margin falls to 100% and unable to open for any more trades. And margin call equity falls below 100% of the margin required. You will have to deposit more cash to sustain the position. If not, the position will automatically close out. So let's just say talking about stop out. So free margin falls below 50% of the margin required, positions will close out automatically. So how much risk should we actually allocate to a trade that we deem worthy or we want to look at? So before I move on with this topic, is there any questions on the content that I have shared before this slide? Okay, so I guess we're all good. Let's look at risk allocation. So risk allocation actually basically means risk per trade should always be smaller percentage of your total capital. So for example, you are putting 2,000 out of your 500,000 kind of trade. So you're looking at a very small percentage of your total capital. So typically the maximum loss should be allowable no more than 2%. All right, 2% is a good gauge. I mean, there are many different kind of risk takers, right? We have the very, very safe kind. We have adverse risk takers. So we are looking at normally when we advise, not advise, I mean, when we are sharing this kind of risk allocation content, we will normally tell our attendees that maximum loss shouldn't be allowable more than 2%. All right, that also depends on your experience level and trading style. So in comparison to a $10,000 account, we are looking at one trade for $200 that will equal to 2% risk and 5% risk at 500. So we are looking at a series of numbers of trades. We have 2, 3, 4, 5. So if let's just say if you are putting your account at maximum of a 2% risk and you take 5 trades, and that will amount to $961 out of your $10,000 account, coming up to about 10% of your account. And then if you are taking a 5% risk per trade, then we will be looking at $2,262 after all these 5 trades technically have lost, or we are risking the amount at a 23% mark. So what is the ideal percentage per trade? All right. So I mean, it would be great if you guys can pitch in and tell me how many percent do you guys actually normally risk per trade? Or you guys can look at these numbers on these slides and give a gauge. We are looking at 1 to 3%, 5%, and 10%. So what is your ideal risk appetite? Okay, so I have most common answers at 1 to 3%. I think 1 to 3% should be relatively safe, but so what is the ideal one that we are looking at? So for example, you have $1,000 and we are looking at a roulette here. Bet on the black to win, there's about 48% chance to win. So how much would you bet? It's a very simple math gambling question, right? So let's just say we are betting on black and you have 48% chance to win. How much would you bet it? Basically, the more you bet on it, the more you would lose. It's a simple math. So even though the percentage of winning is at 48%, which is pretty high for out of 100%, however, the more you bet, the higher chance and the higher risk you are taking in terms of this roulette, for example. And then let's just say, in this case, sorry, I think there's a typo on the slide. So in this case, if you are betting on red, so how much would you bet? So you see, it is the same concept, however, with a lower probability of winning. However, the amount of money you're putting in will increase the risk because of the lower probability. So how many pips should your stop loss and take profit be? So I know that this can be super subjective. Certain people look at the pips, certain people look at the horizontal support and resistance level. All right, so we are looking at how many pips per se. So I mean, if you guys have exact how many pips you guys actually follow through while you are trading, you guys can type it in the chat box below. However, I feel that there are many other ways to look at it, not just pips. So if we have time for the live analysis later on, we will look at how are the other ways of putting in your take profit and stop loss. So we also have to understand risk. So understanding risk and what is your ideal lot size. We have 0.1, 0.3, and 1. So how does lot size affect your stop loss? How does lot size affect your stop loss? So we are looking at the graph here. Account size at 50,000 USD. Currency pair looking at Kiwi dollar. 1% of the account at 500, 2% of the account at 1,000, and 3% of the account at 1.5K. So we are looking at a stop loss of 50 pips, and we are looking at a take profit of 90 pips. Okay, so in this case, the lot size do affect your stop loss. For example, you are looking at putting a stop loss at 50 pips away. However, your lot size is in a huge amount, a huge lot size. For example, you are looking at 1 standard lot, right? If you are losing all the way at 50 pips, that will allow you to might get into margin call. All right, so lot size do affect your stop loss. All right, however, if you guys are more keen on looking at pips instead of a how do I put it? Capital margin level. So do calculate against your lot size. So for example, if you're looking at 50 pips stop loss, use that to backwards calculate to your account and what is the appropriate lot size for you to enter for this trade. So we can also take a look at the pips, right? So let's look at 50 and 90 pips. In this case, you will see that, 50 against 90 pips looks like a very big risk and reward, right? So let's look at the next slide. We're looking at 20 and 36 pips. Yes, it looks like lesser pips, looks like a lesser, more safe kind of trade. However, they are the same. All right, they are the same if your lot size is the same. It's because the risk to reward ratio is the same, right? So if your lot size is according to pips, then this will be safer. However, if you are comparing risk to reward ratio in terms of percentage, they are the same. All right, so this is one tricky thing that sometimes people are not reacting to the number of lot size. Sometimes people are not considering the risk to reward ratio when they're entering the lot size, as well as looking at an effective stop loss. Yeah, so you can see that there's 2 taglines here. It's not about the number of pips you make, it's about the risk to reward of your trade. So look at the ratio. I think risk to reward ratio is really very important in this case. So for those that are wondering how we got the pips, you can look at the entry price on the left, on the right, okay? So stop loss and take profit placement. So where is the appropriate place, appropriate price that you guys technically should look at during your analysis? All right, so first point would be, rather than considering stop loss and take profit levels as fixed pips amount, stop loss and take profit levels should be placed on technical levels on the charts, right? Some traders are super fixated on the idea of, I will only put my stop loss at, for example, 15 pips, 20 pips, and I will not take it beyond that. But how sometimes putting stop loss according to pips might affect your analysis in terms of you're not allowing your analysis to have breathing space, you're not allowing the market to correct to your analysis, you're not allowing the market or the price to actually move as per what you're looking at. Okay, so instead of looking at a pip level or pip amounts, stop loss and take profit should be placed on technical levels on the charts, which is also our important horizontal levels like your support and resistance and historical price values. All right, so one of the example will be shown in this chart below. So stop loss beyond and take profit before. So normally stop loss will give it beyond the resistance or slightly above the resistance or the support, depending on the direction you guys are looking at. And take profit will normally try to put it slightly before what we are looking at, slightly before the resistance that we are aiming to target to, and slightly before the support we are aiming to target to, which actually allows our analysis to be able to follow through and take profit and stop loss when it is absolutely necessary. All right, so one of the example is shown here. In this case, they are looking at a sell, right, from the major resistance area on the yellow line. So you can see that by right, resistance should be at the tip of this hold on, so normally it should be at the tip, right? However, we are putting it slightly above, so we can see the red lines, stop loss, slightly above, just slightly above the resistance level. And then we are looking at below at the major support area instead of resistance. Sorry, that's a typo. Major support area, we are looking at a support of the yellow golden color line, and then we can see that the take profit we did indeed put slightly above the major support area. Okay, that's one way to look at when you are putting stop loss and take profit. I mean, it's a very good guideline if you want to put it right on the resistance area, it is doable as well, or right on the support area, it is doable as well, depending on the situation of the analysis. So what is a healthy risk to reward ratio to have? Risk to reward ratio helps investors manage their risk of losing money from a series of bad trades. It is essential for traders to identify positive risk to reward. Typically, it's suggested to have 1 part of risk and 2 part of rewards. So 1:2 ratio. All right, very simple, just 1:2. Preferably, if you can keep the risk down for a 2 part of reward, it would be great as well. But theoretically, 1:2 is a good ratio amount we are looking at. Yep, so here comes the hurdle. So a fixed risk to reward ratio could also pose as a difficulty for most traders. Something to consider in addition to risk and reward is the winning rate. So let's look at risk to reward ratio versus the winning percentage. So trading strategies win rate, let's look at 80%. So your risk to reward ratio will come down to 1:0.25. Meaning we are looking at it should be reward to risk, okay? So in this case, the chart is being plotted against reward to risk. So let's just say your winning strategy is at 80%. You are rewarding yourself at 1 part with 0.25% of the risk, and then so on and so forth, all the way to 20%. So let's just say your strategy win rate is very low at 20%. So you're actually exposing yourself to 4 parts of risk when you're only earning 1 part of the ratio or reward. All right. Oh, thank you, Juha, for telling me. Okay, so apparently the chat box is not working fine for everybody. If you guys have questions, you can put it in the Q&A box as well, I guess. Yeah. Okay, so let's move on. Okay, that comes to the end of this chapter on risk and reward ratios and leveraging. So we do have some time left, and I think it would be great if I share some live analysis, and it would be great if you guys wanted to pitch in to look at some pairs and we can analyze together. Okay, hold on, let me stop my screen. Let me just switch over. to the trading view. I think I need everyone to mute the mic. Hold on. All right, hold on. Let me just share my screen real quick. We are unable to give WhatsApp line. If you guys have any more extra questions, I will show you a platform later on where you guys can access and ask questions. All right. So let's just hold that till the end. And let me share my screen right now. Okay. It'll be great if you guys can let me know that you can see the chart. Okay, I believe it should be sharing fine. Okay. Thank you. Okay, let's look at what we can see on dollar yen. We'll look at the weekly chart. Pretty good upward movement for a while. Looking at a potential downfall, further downfall. Okay, let's look at the daily chart. On the daily chart, I can pretty clearly see a ascending channel prior to the downfall. You can see that actually price has already broke out the channel. We are looking at a potential drop from here. Right now we are looking at a resistance, support turn resistance at price 142.078. Okay, on the daily chart, let's look at a 4-hour chart. I would say that on a 4-hour chart, the trend itself is not quite as clear. However, we are looking more of a ranging situation at support at 138.51. Let me just change this. Okay, and we have resistance at 142.078. So previously, price indeed dropped and did a little bit of a pullback, and we can look at a common V shape that we are looking at. I would say the overall day and weekly chart, we are looking at a downward fall. I would much rather analyze this to be a downward fall, looking at this and placing a nearer take profit. and putting a slightly above, just touching this, looking at a slightly above straight stop loss. This is how I am viewing it. We are looking at a potential sell. Let's take out the Fibonacci retracement. Closer to a 50% Fibonacci retracement for our take profit. And then let's do a smaller one actually. Yeah, looking at the sell entry at 50% Fibonacci retracement as well. Let's take out our. We are also looking at a. Sorry, this is wrong. Let me just take. The 1.8% of stop loss. We can use this range. So we are looking at a bigger range for stop loss. We can also take a look at our and let's take a look at some indicators. Yeah, we are looking at a more likely to be downward fall. Let's take out our lagging and leading span. So price try to break out of the Ichimoku cloud. We're looking at it to turn back down. So we are more likely to look at a potential drop. So classics are also looking at a potential drop downwards as well. It depends. All right. So we are also looking at a small upward channel. Okay. So if those that are concerned with this upward channel, you guys can wait till the price to actually exit the sale entry. I mean to exit the upward channel before doing any sale. So we can remove this 50% retracement and change it for a 38.2. And then if price actually breaks out of this upward channel, then we can confirm a better sale towards it. All right. So in this case, if you guys want to, you guys can actually put a closer stop loss to make it lesser than 1:2 part. All right. So this is dollar yen. Do we have any questions or any requests? Okay, so we can look at, okay. Starting from the weekly chart. Previously was a upward moving. All right, still upward moving actually, but looks kind of odd. Looking at something like this. Okay, we can look at a historical price level in March 2020. Looking at this to be a resistance level. However, our more recent resistance level, we are looking at 1.38821. Let's take a look at our daily. We have a clear sign of downward trend. And there was a certain pattern. This is what I have spotted on a upward trend. So let's just say if this is 100% accurate, then we will be looking at a downward fall. So around this area. So yes, indeed, it is a downward moving trend. So let's look at the H4. Can be seen as a channel, but not a very pretty one, I would say. However, we are still looking at a downward fall. Looking at a resistance level of 1.35355 to the most recent highest amount, we are looking at a general downward fall. I will not put my take profit to be 1.29862 because the price is a bit far away. Normally I do analysis that has a greater potential to complete in the same trading day. We are also looking at a forecasted entry that is a bit far away. It's a few bars away. So you guys can take into consideration and analyze it on your own POV. All right. Let's look at where should we place our stop loss. If I were to put it on this right shoulder resistance, it'll be too far away. It'll be 1:1 risk to reward ratio, which I'm not in love with. So I'm looking at a Fibonacci to help me out. So we are looking at a take profit at 78.6% Fibonacci projection. Take profit. This is a sell. And then let's take a look on how can we get our Fibonacci projection for stop loss at 1272. So we are looking at using Fibonacci projection. We're looking at 1272% as a stop loss entry. As a stop loss entry at 1.36131. All right, so this is what we are looking at. It's sort of a forecasted sell entry, is a bit far away, but looking at previous 2-point touches, we are looking at this is to be a probable resistance level that we could be looking at. Then we can also look at a indicator. We're looking at a bearish movement right now for Ichimoku cloud, not very pretty. We can look at RSI. Also looking at a potential reach in resistance, and we're also looking at a downward fall. a very gradual one, but you can see that it's a downward fall. So this is dollar CAD for you guys. Okay, I'll be doing one last pair before I share the platform there. You guys can get in touch with us, and also a special Black Friday promotion. One last pair. Okay, let me think. We can do dollar franc. Let's do dollar franc. Let's do dollar euro. Okay, dollar euro. On the climb for dollar euro, you can see a very standard upward moving trend. Looking at a weekly chart, upward moving, not much of a key levels except for resistance at 1.0303. Let's look at daily. Previously upward moving trend has now dropped down. So we're looking on the decline side of things for dollar euro on the daily. And let's look at 4 hourly. 4 hour mark. Okay, so previously was a pretty steep downward channel. It looks like price has actually gone up a little bit, a fair bit. And then we can see a slight upward moving. If you guys really want to, you can do a very small analysis here. Just right below the support area. Let's use Fibonacci projection, looking at a 78.6%. Yeah, there we go. We have a 78.6 for the buy entry, and looking at a 1.272%, which is 127.2. Looking at a stop loss over here. However, this is a very small trade. All right, so for fast and quick movement actually for euro dollar. Let's look at some indicators. You can see the price is still struggling to actually break through the cloud. Okay, if you guys are fond of Ichimoku cloud, you guys can wait till price actually exceed the cloud to take a movement. All right, whatever analysis right now I'm doing is purely based on the price action and not reliant on the indicators. Okay, so indicators are just supporting for me. So you can take a look at stochastics. Yeah, so we are pending the blue line to actually cross over the orange, so which is our percentage K to cross over our percentage D to have a better confirmation of a buy entry. Okay, that is for euro dollar. So let's move on to the VIP room. All right, so actually IronFX actually had partnership with our company to actually create a VIP room for you guys. Okay, so we are looking at a platform which allows you guys to actually interact with us on a daily basis to catch up on daily news, majors analysis, like we have euro dollar, pound dollar, dollar franc, dollar yen, Aussie dollar, Kiwi dollar, and DXY, which is your dollar index. Okay, so let's take a look at the platform. All right, so every day there will be important news that you guys can actually look at. There are forecasts that you guys can consider to take note in your analysis. So you can see that there are so many news for each currencies, major currencies on daily. So there's euro, pound, USD, of course, yen, we have the Aussie, Kiwi, and we also have commodities, which are our oil, as well as gold, which is a very popular pair as well when you guys are trading. So let's look at some of the majors analysis. So on a daily basis, we will also post analysis that you guys can consider and also discuss. So for example, I would like to discuss with him on this, and or just want to ask on the page. So for example, let's take a look at let's just say I want to put in a Fibonacci for this line, please for support. So I will say, hi, with this people. So one special function that allows you guys to actually fully interact with us would be to link object to text. Okay, so I have selected the Fibonacci extension with 0.786 lines and confirm, and I'll post. So once I posted it, if I hover over, you can see that there's a blinking red color Fibonacci line, as well as on your percentage line. You can see that, oh, we are able to understand what you're saying. So let's just look at some of their highlighted levels. You have the first resistance, the Fibonacci levels, second resistance, etc. So this allows you guys to actually interact and also look at our analysis on a day-to-day basis, which would be beneficial. And it's an open space, especially created by us and IronFX in partnership for you guys to actually have this exclusive website for everyone to interact and also look at the charts together. So we also have commodities. We have gold and silver. We also have your Brent crude oil, WTI, natural gas, and looking at soybean and corn as well. We also have your indices, your S&P, your Nasdaq, your DJI, your DAX, Nikkei. We also have crypto, Bitcoin, and ETH. All right, so we have our crosses as well, our special crosses that you guys want to see. It will be also available on this platform itself. So how do we get in? So normally on the IronFX account, you guys capital has to have a certain level. However, now it's on a 50% off. So what does that mean, right? So let's look at it. So for silver account, initially your initial capital in the IronFX trading site has to have $1,000. So now it has gone down to 500, 1,000, 2.5, and 7.5 for all of the different level and tiers of VIP account. However, starting with 500, you're able to access everything that I've been talking about over here. Okay, so you can look at, so some of the benefits will be exclusive market forecast, and then you're able to interact and ask questions about analysis. You're able to request market forecasts as well, personally to you. So just to take note, the Black Friday promotion will last from 21st November, 2 days ago, until 28 November. All right, the year has to be updated. Sorry, should be 2022. All right. let's look at so your access. So step one, you just have to have a IronFX account and then log in to client portal and select VIP room. And then during the course of promotion, you just have to deposit enough funds to access the required account level of your choice. And lastly, you'll receive a verification and proceed to verify your email to access the VIP room. Okay, so you can also click on this tutorial. So it will be shared on how you can access. All right, so I'll be giving this page to you guys on the chat box. Okay, so you guys can look at this. So can also share with you guys the website for that. All right, so you guys will be able to register from this website itself. All right, is there any last questions? Any last questions before I end the webinar? Oh yeah, for the attendee that was asking for the direct communication, this will be a perfect platform for you to have a direct communication, and best with a Black Friday deal of 50% in partnership and thankfully for IronFX. All right, so if there is no more questions, we will be ending today's webinar. All right, thank you guys so much. Thank you.